Hello traders, welcome to today's video. A very big day in the markets today, so I thought I'd better get a video update done for you guys today. Even though it's been about a week since my last one, I have been keeping up with the written updates. But of course, we go into one of the biggest events, the biggest event of the year for sure, and one of the biggest events that any of us will probably have seen since we have been actively trading. So yeah, very important that we know where price is right now and what could happen over the coming hours and of course days, weeks, months, whatever it is, whatever time frame that it is we're looking at. So yes, US elections. Let's get straight into the price action. I'm going to start here with the technicals, okay, because that's what I do. I haven't really been following what's going on with the elections themselves. I know that the polls are just like all over the place, as they would be, because they're just going to get people confused. But we'll see what happens over the next 24 hours. It's going to be exciting. Okay, so technicals, first of all, right? Bitcoin. It did not take the all-time highs on spot or perps, but it did on the CME chart. So if we just have a quick look on the CME chart, okay, we did just sneak above that previous all-time high there on the CME BTC USD CME chart. And a couple of the ETFs did also take all-time highs, not the bigger ones though. So mainly just the CME that we are looking at. Now, what we've seen since then is something very interesting. Okay, we have been talking about this massive key support resistance level, this massive SR level at 67,500. You'll know that that was the first target that the main target that I had for the long position. And this is where I was taking the majority of my profit on that long position. And then, of course, we had that move up, and now we're finding ourselves back into that. What we've also had over this relatively short period of time, if this does load, yep, there we go, is the developing POC, of course, shifted down. And we got what we have seen previously. Okay, we had a situation like this before where I actually thought we would go and break the all-time highs previously here because we had this POC shift down. You didn't get continuation below, and then as soon as you reclaim that, then we had this move up. I was looking for the all-time highs to be broken on that particular trade. It didn't. We then made some new lows, but a similar situation here. Okay. Done it again, where the POC shifted down, you didn't get continuation lower, okay, you didn't massively reject from that, you held that value area low, and as we move back up, we have, of course, managed to essentially reclaim what was these two high volume nodes. Okay, we can see that the POC has been shifting between 63, all right, it's been there a number of times, and 67,500. And once again, we didn't quite take those all-time highs, but similar to last time, I am anticipating that they do get taken. The difference here being that I would have been shorting this anyway, because I was expecting a long, slow summer, as we all know, and it was just kind of what we've had. Okay, although it's been pretty volatile, it has been a pretty just awful summer to be trading. But on this occasion, I would be looking for this to break out. Okay, the consolidation has been plenty long enough, and I think that the market overall looks very healthy for more upside. So as long as we can hold the 67,500 area, this is looking very good. And this is the zone in which I have been bidding. I would like to continue bidding until it holds. And the only time where I would really get concerned about that is if we start to basically lose that 63k previous POC. We could still spike down there. Be aware of that. This is something else I'm going to talk about in just a minute. That could still be there. There is confluence there. But the levels that I was looking at previously around that 57 are, for me, no longer valid. Okay, if we do go below 63, if we get a move down and we see the price is just staying there for a few days, then I would be out of long positions. And yeah, well, I guess that does bring back into those 57k targets or carnage or whatever it is, just overall bearishness for the market. But for where we are right now, things are looking pretty decent. So if price can hold here, I am expecting a move to an all-time highs. Now, the confluence that we have a little bit below, all right, so it is there. Okay, we know that our previous POC was there. We do have a daily OB. We have an untapped daily level, first of all, 63,000 exactly. We also have a daily gap, right, which has not yet been tested. We had a high volume candle breakout, essentially, to come into these take profit levels. We didn't come back in and test into that zone on this consolidation, which is what we had done previously. Okay, we can see that when we had these moves, all right, price did come down, fill these gaps, and we've seen that consistently. Okay, we didn't do that previously. We did just continue to all-time highs. So if there is to be a drop down, that would be the next level that I'm looking at, where you have an order block. You have this daily gap has been basically tested, but this one has not. So that's the level below us. If we do go down there, that for me is a level that I would really, really hope the market would bounce from, otherwise it does start to look really bearish. It doesn't have to go down there at all though, really. If we are truly bullish, we should be holding this market structure that we have locally of low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And of course we have broken the market structure very significantly on this already, because the last lower high that we had that took the low is back here, and we have clearly seen the prices that spent some time above there. All right. Now locally, if we just go down to the lower time frames, okay, we are getting a bounce from that zone. This is something that I did mention quickly on yesterday's. Just did a written update for the crew. Let me just put on. We have like our previous week lows, essentially. All right, so price came down. Our previous week lows were here. Okay, that happened over the weekend. We did have that move down to take out previous week lows to continue to test into that big point of control at 67,500. And then we have those weekend highs, poor highs from the weekend from Saturday that once again have not yet been taken. I would be looking for a move today to probably go and take out those highs. So if we're going to talk fundamentals, if it's looking good for Trump, okay, we can very much expect to move back up towards that monthly open. All right, at 70,200, taking out these poor highs that we have here, especially from over the weekend, coming back in to test this impulse here. If things are still looking good, then of course we have already back tested that monthly level. So we did close the month below its previous like all-time high monthly close. Price came back into that level, rejected, consolidation lower. If we do get through that monthly open, I don't think that would necessarily cause a whole lot of resistance again, because we've already tested it once and we have continued lower. So then you'd look to trade through that back to all-time highs essentially. So that really is like kind of the levels that we're looking at the moment. It's relatively simple. If the market gets a dump and the elections are looking dumpy, right? You've got the confluence, you've got the daily gap, you've got the daily OB just below, you've got that previous yearly point of control, the range point of control, you've got the previous month open down there that could still be tested. So 63k is crucial to hold as support if there is a move down. If there is to be a move up, you would look at that first resistance at 70,500. If that doesn't get rejected, then we are going to all-time highs. So do we see something like this and then see a move up? Do we see that we drop back down and do this and stay in a range? Do we simply stay in a range? We don't know, but those are the levels that I'm really looking at right now. A few other interesting things. Okay, what else could we look at? The TPO. So the last couple of days, MPOCs have been cleaned up. So we can see here from over the weekend, we had 2 MPOCs. We did get that Monday price action that cleaned up both of those before taking the lows. And then therefore, as we have seen the bounce, you would expect those highs to be taken. We do have the poor highs over here from Saturday. And because it was weekend price action, one would expect price to come and take those out sooner rather than later. Another interesting thing we have. Now, this isn't necessarily Bitcoin specific. Well, it is Bitcoin specific because it's Bitcoin dominance. But Bitcoin dominance is starting to look very, very interesting. Now, if we do get a big move up, you would look for that dominance to continue to increase slightly, not in the same way as when we get these moves down, because essentially what we get when we have these big moves down for Bitcoin is the altcoins are getting crushed. If Bitcoin does start to trend up, you would look for a just gradual increase in that dominance as altcoins can't catch up. But when we do get the first retrace, that for me is when we would look for, yeah, let's see if Bitcoin can just creep up. If this is bullish price action, okay, if Bitcoin breaks out, Bitcoin creeping up, and then its first correction, we would likely see an alt season start. And I do believe that the Bitcoin dominance is getting to a point where it looks like it could be similar to previous cycles and starting to get very toppy here. We were expecting the 618 at bare minimum, but of course often it goes through that. This is like looking like pretty decent capitulation for altcoins in general, with Bitcoin managing to maintain at those all-time high levels and altcoins still making new lows. Ethereum's surprisingly holding up okay here, but certainly other altcoins are getting crushed right now against Bitcoin. And actually, if we do look at the cycle, not the previous cycle, but the 2016 to 2017 cycle, we had a very similar thing playing out. Okay, you had Bitcoin putting in this range in 2014, 2015, drop down as, of course, the first set of altcoins came around. Then you got this climbing, this steady climb of price action that took it back into what was, okay, the support that broke down. You come back into that area, you then start the bull market, all right, around that 2016, around 2016. And then as the alt season kicks off, you get that massive drop in dominance. There's a similar structure playing out here. Okay, it's not exact, but it's a similar structure playing out where this was the support that broke away in the last market cycle. And we have come all the way back up into that zone. And if we can just chop around here, then once again, I do think that we see a situation over the next year where that dominance collapses. And we get the new wave of altcoins starting to take shape, because of course we've got so many more altcoins now. It would be kind of insane to go through a whole market cycle without Bitcoin dominance making a new low, just because of the sheer number of new alts that there are. Is there anything else that we really need to talk about? I don't think so. I'm not going to touch upon the legacy markets and all of that, but there is a couple of other things that I maybe want to mention here, which is just, previous stuff that we've had during election years. Now this is going to be kind of bright because I don't have the dark mode on here, so forgive me for burning your eyes, but this is what we're looking at. So previously, over the last, you'd have to go all the way back here to 2020 for the last time we didn't see a positive return on the US stock market, on the S&P 500 after an election. So you go the Biden versus Trump election, okay, every single year apart from 2020, and of course there was some pretty bad things that happened within that first President Bush presidency that caused big crashes in the markets. And we did, of course, have the dot-com bubble burst around there as well. But yes, we have seen 2020, 2016, 2012, 2008, 2004, 1996, 1992, 1988, 1984. All of these previous times have seen a very positive return after the election. And of course, on this occasion, once again, we are seeing that the S&P 500 is up, but generally speaking, it goes up more after the election, at least within recent history. Now, if you go way back into the past, okay, it was all very scattered. But recent history, since we've had the internet, essentially, since this stuff has really been traded, it's been overall positive for the markets after an election year. And then it would be the latter years of a presidency where you start to get that bigger correction. And the other thing that we are, of course, saying is it really doesn't matter too much who wins, because in general, the stock market just trends against the dollar. That is what it does. I am bullish on the stock market over the next year, regardless of who wins the election. That doesn't mean that short term we won't see massive volatility. Of course, if the markets don't get the president that they want, there will likely be a short-term crash. But over the course of the next year, I think that will get bought back up very quickly. I think that would be an opportunity to buy very cheap. And we would see that it still continues to trend up against the dollar. The dollar is a lot weaker than the stock market, and therefore we look for the long positions. The other interesting thing here is just the difference here between whether a Republican or a Democrat was elected. So we have seen recently, okay, it's pretty badly skewed because, of course, this Obama year, or this Obama one, was very, very negative. Okay, but overall, if a Republican is elected, there is a greater return for the US stock market after a Republican is elected. And of course, I think that is what the markets want on this occasion. So, yeah, sorry for burning your eyes. I did just want to point that out very quickly. But I don't really think there's anything more to say. Okay, we are getting this move up this morning. I would be at the very least expecting those Saturday highs to get taken here. Monthly open, be careful there. If you're in long positions, it's likely we see a rejection. I will probably look to short that. If you really do want to trade it, okay, if there is to be a move into monthly open to take out those weekend highs, that would be a good short. If there is a significant drop that takes you down to 63 to 64, don't get scared. If that holds, it's all looking good. But you'd like to see daily and weekly closes back above here. It would not be bad at all to wick down here. Okay, it would not be bad at all to wick down, close back above, and get that big continuation. That for me would be fantastic. That is the ultimate thing that I would really love to see. Okay, it's a corrective move that takes us down into that area. Doesn't have to happen, but if it does, that is a really good zone. I have been buying here just in case it doesn't, but my long positions are very nicely around here, and I haven't really had an opportunity to compound with size yet. But that is the zone that I would be looking to add some significant size. If it closes below, of course, we can't control what the market does. And if there is a result that we don't like, then it could go low. But that's just the way that trading works. Also, just to remind you, not only do we have the election today, but on Friday we are expecting another rate cut to be announced. So if we get both things, if there is a positive outcome with the election for the markets, and if we do get another rate cut, I think that could be very bullish. If there is a negative outcome for the markets and the market starts to tumble as a result short term, then do we see that compounded with a shock? We're not going to cut rates again. We want to stick as we are for now, because it may be unexpected. That could then compound onto the downside, and we then see cheaper prices. But of course, I do believe it does inevitably get brought up. The next year, very confident will be a bull market. The only thing that will be stopping immediate profitability on the longs is if we do see what essentially would be this cycle's kind of black swan, where we get a result that the market didn't want initially. That would be Democrats, right, getting in power, coupled with a pause to the rate cuts, which would then bring about a lot of talk about recession again. But I still don't believe there would be a recession. I still think that would be the black swan that takes us down here, and then we just go crazy after that, like we did over COVID. Speculation. But that's just my thoughts on the market. I am long-term bullish. I do believe that this cycle has a lot more left in it, and that is the way that I'm trading it. But I'm going to wrap it up there. It's been quite a lot of waffle, talky. But have a great day. Enjoy it. I'm going to be flying tomorrow, probably when the election result comes out. So, yeah, I'd very inconveniently planned it so my visa runs out on the day of the election. So I do need to fly tomorrow. I do need to leave the country I'm currently in. Well, not leave the country I'm currently in, but I do need to start making my way out. But anyway, enough of that. I'm going to wrap this up. I will be around, but I will be traveling. So enjoy your day. I'll see you on the next video. Trade safe. And let's hope the market gets the result it wants in the election, and we see new all-time highs next week. Yeah. Bye-bye.